TGIF Warriors, Aussie Kiwi. Good trade. Reload. As talked about yesterday, I'm curious if we broke Blake's trend line to the upside. 2-week off numbers of just above 106. Comes in here at 106.02. So if we were able to achieve that, it's a good place to book it, or at least something. Next week, it should be easy to achieve. It'll be underneath where we are now, 105.48, to have a 2-week reversal, but we are having a little mini reversal week to the upside. Hope everyone's doing okay. Yen, not quite finished in my view. You know, someone could say this was 1, this is 2, this is 3, and I know a lot of people were talking about 108.10 as being an important area, but you could also even just go off, maybe this is a little handle here, or measure the breakout from here to here, from here, and 109 is possible. So risk on. I'm going to use US dollar yen for when it's finished to start probing the metals. Okay, so a lot of people thought we had a breakout the other day in gold. It really didn't happen. I bet people that got long over here are wondering what to do. Maybe it holds this pullback and people don't want to go home short gold over the weekend, just in case there are missiles flying over the weekend. I still think that there's a shot. Silver is even a little weaker. I cleaned out all the bears here over this high, even this high. So all the shorts are out. And if I just do this and then we look for a continuation formation and we break down, that would take it down to 16 in the silver, back down here. I think there's a possibility of that happen now that we've taken out quite a few shorts. We need to take out 16.10 to clean out the bulls. And then I'm going to be looking at potential buying opportunities down here. So I hope everyone had a great week. I feel like I laid it all out there on the floor for you guys this week. I know the whole team has, you know, getting the beta out. I'm not sure when the new website design will be out there. I believe that you guys have heard me say this, on Friday is a good time to at least attempt sign up for the trial. It's $1. If you feel like you didn't get $1's worth of value, just surfing and navigating things like this, I'll wire it to you, your refund. So here's Blake's look here, and Euro. So we'll see what the team has to say. You know, there weren't a lot of real dynamic things this week. I guess you could say the pound to the upside was. The euro still messy. Overall, I think the dollar is still lower on the week, which, let me look at the weekly here. So here was the NFP Friday. I was talking about, you know, selling any dollar strength. We held here. Looks like we're at a pretty important level here on the daily. The weekly, a little bit unchanged. I'll tell you something, under this week's low, which was 89.36, and we're currently about 50 points above it. It should wash to 87.80 pretty quickly. So pretty good demarcation line right here at this week's low. So everyone have a good week. Crude, sure, I could take a quick look at crude. This surprised me last week. I thought we were going to have more downside. And then the news came out about the gas attack. I'm seeing divergence now, okay? And I know that Steve was looking for a short up here. So on the 1 hour, we're not confirming. I've seen targets up around 68, which will fulfill. But, you know, I can't get long crude up here. See, here's your 1, Here's your 2. Maybe we get 3 towards 68, and then a correction begins, and maybe we could see 65 again, 65.5. That's the way it looks to me. Nigel, I hope that helps. I'm sure Steve will give you his view. And Blake, how are you today, buddy? TGIF.
Right. You know, it's Friday. You know, how bad can it be on a Friday?
Yeah. Yeah.
Even if I have some trades that are going against me, you know, it's still a Friday, which I do. I'm long some dollar Canadian still, and you know the thing's been, you know, just a kind of piece of garbage. But you know, but at the same time, I've got some euro pound short, which is doing great, and Aussie New Zealand shaping up a lot nicer. So I mean, it's kind of like, yeah, you win some, you lose some, and you hope to come out ahead. But I want to point out, I just tweeted something regarding the U.S. dollar Swedish krona. Okay, and I want to point out a couple of things before I go into the U.S. dollar Swedish krona. Let's take a look at the euro. So the euro dollar is trading, pretty heavy, and the euro dollar is being sold against a lot of different currencies. I mean, if you look at, the euro pound, which is, this is, the bear flag that we've got going on, which, we do have a pattern in play for. You can see active patterns.
Oh, there it is.
Yeah, as the new, pattern in play. So we've got a euro pound, bearish pattern in play going, but it's selling off against, even the euro Swiss is coming down a little bit. The euro Canadian's dropping, the euro Kiwi's dropping, the euro Aussie's dropping. So the euro is basically being hit across the board, and the euro dollar is approaching, what I would consider pretty key support, because this is a 50% retracement. You can see, I'm going to just move this really fast. This is I've written out a support zone, or drew out a support zone from all these spike lows around here. So you can see that this area is all very good support. Now, will it hold? It may, of course, because we've held it a lot over the last couple of weeks. But if it breaks, then what? Then you got to start going, okay, then what? Because the dollar and the currency market, and I try to explain this concept to people, is it kind of acts like a domino effect. If you get the euro dollar breaking support, then what else happens? The question is what happens, and my opinion is that you're going to have dollar strength come through the market, and it's gonna, you look around, you go, okay, well, the pound trying to break out, which we, yesterday we looked at this and said, okay, it's going to break out. We had a little triangle, which we did. Now we're closing in on the 127% extension, but the problem with the pound right now is that you're seeing this big reversal candle. Is it possible that you get, a false breakout here? That's possible. And if that happens, then if you're long the pound, you got to be a little concerned about that, right? Because how many people have just gotten squeezed out of the cable overnight in Europe? And I say that because it happens a lot in Europe, right? You think that you think that everything's honky dory, and I've seen things reverse from Europe to North American trade on so many different occasions. It's not even funny. That's why I try not to panic too much when things happen in Europe when I get up in the morning, because I go, okay, well, let's think about why this is happening. Now, that's not to say that the pound won't hold its breakout. I'm just saying that it wouldn't surprise me if we saw a bit of reversal. Hold on, this speaker's a little loud here in the office. Okay, the Aussie just hit a 618 retracement. We're about ready to put in a gravestone doji if we close any lower than where we are. But the Aussies had a nice rally towards, you know, you could say this is channel resistance, because if I just draw it a little bit better, you know, comes in maybe like that. All right. So the Aussies closing in on some resistance here. Kiwi, another example of, oh, you know, the market got really bullish on this breakout, and, you know, quite possibly it could reverse. So you got to watch the Kiwi, because the Kiwi's been unbelievably strong, and now we're starting to show the Kiwi show a little bit more weakness, right? It is, because we're seeing the you know, Aussie New Zealand make its way higher. So
maybe Aussie Kiwi does better with them both coming down, only the Kiwi's weaker on the decline.
It's quite possible, you know, it really is. And so, you know, again, I'm just talking, if the euro starts to break through 123, what happens here? Well, you got the Kiwi just squeezed out, you know, all these shorts right here overnight, you know, from, you know, how many stops we're trading, we're above here and here, you know, I mean, I'm assuming a lot. So then you got the dollar Canadian, which, you know, let's say I'm going to hope rather than say, because, you know, I'm actually long on the dollar Canadian. I'm long on the completion here, big 618 retracement. I've been a buyer here at 125.80 for the last couple of days. It's been a very frustrating trade. But then again, so was the Aussie New Zealand for the last couple of days too. So, right, it's, you know, it's when you're trying to catch a turn, it's not easy by any stretch of the means, especially after such a long, hard downtrend. Now, the thing is how about if the Canadian, the dollar gains some strength and the dollar Canadian doesn't create a new low? Well, then now you have a downtrend that is not so much a downtrend anymore, where we're not creating lower lows. And then if we break above 126.30, then you're creating higher highs. So then you got a real turn in the trend, or at least a consolidation, bounce, whatever it may be, especially after such a steep move. That's possible. Again, this is what if the dollar strengthens. Look at the dollar Swiss. This thing has been bunkers strong. Wait, let me see if I can conjure up a good somebody give me a good UK or UK saying Kraken. Maybe it's a little Kraken here. Is that the right term? Amanda or Greg or Nigel could help me out. But anyway, the dollar Swiss has been extremely resilient. But the one that really catches my eye is the US dollar Swedish krona. Now, I tweeted about it just a few moments ago. And the thing about this US dollar Swedish krona, let's take a look at a longer term chart here. So the US dollar Swedish krona, this is a weekly chart. This is right here something that's very significant. Do you guys see that false breakdown? Okay, so we got a false breakdown and then a reversal. Now, the thing about this dollar, the dollar Swedish krona, is we are trading at, and if you take this fib level right here from these lows, we're trading and stalling right at the, and you can barely see it. Let me get rid of this fib, so because they're right on top of each other. That's an 88% retracement. This is the big 38% retracement. So if we crack above these highs, which you can see I have an alarm set, if we crack above these highs, this US dollar Swedish krona could really take off, because you go to like an intraday chart. Here's a 4 hour. I'll draw it for you guys. This is a cup and handle pattern. So if we crack through this resistance, I mean, we're going to start squeezing. And so those are just a few things that I'm looking at as the dollar looks a little firmer. Now you take a look at the whole dollar index. The dollar index is still in a big downtrend. But if the euro breaks through 123, You know, will the dollar index start to really, you know, shape up across the board? It's possible that it does, especially given the fact that the dollar has been beat up for so long. Positioning is very skewed to the you know, upside in euro positioning. So, and we're going to get new COT reports later today, but you know, knowing that the market is extremely long euros, I think a euro liquidation has been the risk, and that's been something we've been talking about for the last couple of weeks. Has it come to fruition yet? No, it hasn't. Could it? Yeah, it could. And so that's why I think that the risks are there. That's why we have to pay pretty close attention to the euro, especially if we start breaking through 123. You know, especially if we start, you know, trading down towards this trend line again, which is 122.80, and then obviously if we break through 122, then it's game on. Then at this point, you know, if we break through like this support zone right through here, that's when, you know, the dollar is gone. When I say gone, that means the dollar is, you know, it's going to squeeze, and it's going to squeeze hard. And again, I'm going to reiterate my stance here with the dollars. Same conversation we've had the last 2 weeks. Has anything changed, you know, on from a macro standpoint in the dollar? No, nothing's changed. Is the dollar still in a bearish trend? Yes, it is. And do I think the dollar's excuse me, going to new highs from here? Probably not. But you know, there's a lot of uncertainty in so many different aspects in this market, whether you're talking about, you know, trade wars or you know, political conflicts or what have you, and the risk of, you know, the stock market in itself. You know, I know it's trading up today, but you look at here's the Dow. I mean, the Dow is pushing right into, that's not a 200-day, that's just a 200 period moving average on a 4-hour chart, but we're pushing right into, you know, trendline resistance. You know, if the stock market gets a little wobbly again, and then you have all these other fears too, people might just turn around and say, you know what, just buy me the dollar, just put me into dollars, and that's a risk. You know, for anybody who's short the dollar. So, you know, those are just a few things that I'm looking at as far as the dollar goes. Dale, do you have any comments?
Yeah, same. You know, basically a neutral week. Pound led the way. I think the significant event was euro pound breaking down. So, you know, it makes me, even if the euro does rally, I'd like to be a seller up at your red trend line should that happen next week.
Yeah.
Yeah, so, you know, that's right here. I wouldn't know what to do. I think Aussie Kiwi might just be beginning. We finally have a nice reversal week, and, you know, you had to gut it out. And, you know, nothing wrong with taking something off between here and 106, but maybe it's the beginning of something. And even a fib retrace could take it back to your neckline there, Blake. So 108 and change. I know you're looking for bigger things, but you know, you can always just hold a core and never let go of a core of your position. Call it a third, call it a half, and trade around it, but always keep a piece on. You know, someone once said to me, Blake, when you're long, you know, sometimes, and I get out, I just book it, it's a good trade, and I move on to the next. Before you do that, when you're long, ask yourself, is there enough evidence for me to reverse and go short? And if the answer is no, you stay long, and vice versa. If you're short and it's working, say, would I buy this market? And if the answer is no, you stay short. It's a simple exercise, but good questions to ask yourself so you don't take yourself completely out of a position.
Yeah, some great coaching, Coach. Yeah, absolutely, and that's why they call you Coach. Hey, speaking of which, you know, you guys, if you ever want some one-on-one with Dale, make sure you get with him via Twitter, or you know, I know he does some you know, hourly coaching on the side. So make sure you get a hold of him.
Oh, thank you, Blake.
Now we do have today. You guys got to stick around today.
Yeah, it's going to be great. I can't wait to talk to Ron.
Yeah, we have Ron, who is he is. I've been in the same chat room with Ron for. He'll tell you because he's going to have. I mean, I'm going to say at least 5 years. Under 5. Yeah, it's been a long time, and he's out of Florida, individual trader. I've had the opportunity to speak with him over the phone, personally, and chat with him. He's got a certain way of trading that has been, you know, very successful for him, and we call him Captain because he is a sailor. He's a full-time sailor, part-time trader, or is it full-time trader, part-time sailor? I know he's a full-time drinker. He always puts up pictures of the video cams of the Soggy Bottom bar that he likes to frequent in South Florida. Oh, here, the Dow is actually pushing right into resistance here. That I had an alarm set up for right into this trend line. So.
Yeah, a lot of people are saying that's like a head and shoulders where you have your vertical line, and the breakout, like in the S&P, would take it to 2,800. I didn't measure the Dow, but could take it back to 25.5, 26.
Yeah, it's possible. I know Steve was looking at that, and you know, the rallying risk is looking like it's happening. You know, and you know, what happens if we don't drop any missiles, and let's, you know, let's speak about that for a second. Who cares if we do? I mean, let me speak from not a humanitarian standpoint, but from a trader investor standpoint. You know, by us engaging in firing some missiles into Syria, is it detrimental to what happens in the stock market? Is it going to have a negative effect in the stock market? Probably not. So even on a big dip in stocks, let's say the stock market dipped 1%, if we launch some missiles, I think that it'd just get bought up immediately after that. The risk right now,
Blake, in my opinion, it's going to be the targeting of the missiles. So, you know, there are a lot of Russian troops on the ground. So I'm sure we want to avoid Russian casualties.
Yes.
So,
now,
you know what I mean?
That's a really great point, Dale. Because it is you know, Syria is you know, it's where a lot of you know, Russian ports are at, and it's a strategic place for Russia. So yes, that's a really good point that you make there, and yes, it could get a little tricky. As long and that's a really good point, as long as, you know, it doesn't upset the balance, whatever balance there is, you know, maybe a tightrope balance of what's happening in the tensions between Russia and the U.S. So that's a great point. But you know, I think like I said, any military strike like that even might cause a little bit of ruckus in the equity markets. I don't think it's going to have a sustaining effect. But is there a risk of a swift move lower if we, you know, lobbed a couple of missiles? Absolutely, you know, there is, and that's why this area that we're at in the stock market, you got to be very careful. And you can see that here's the S&P. This is probably what Steve was looking at, and I'll let Steve go into it a little bit more in better detail here in a few minutes. He's got something that looks like that. I don't like to look at head and shoulders patterns unless I'm in a pretty strong trend. But that doesn't mean that they can't complete and they won't work out. So you know, it's not something that I tend to. I have to be in a really strong downtrend to start looking at inverted head and shoulder patterns, or really strong uptrend to start looking for, you know, head and shoulder patterns. And
Before you go, Blake, I just wanted to ask you, because, you know, we can't ignore it. You know, everything that's coming out every day. I mean, Trump's personal lawyer having his office raided, all the tapes. If there is a move by Trump to fire Rosen, I don't know if it's Rosenquist or whatever, or Mueller, and people are talking about a constitutional crisis. I asked Peter Bookvar that, and he said there might be a day or two of drama, but the markets will look past it. Do you think the markets could look past it? I don't know what they did with Nixon. I was having too much fun in college. So, you know, do you think they'll look past it?
I don't. I think they will. Unless it seems like, you know, if there's a risk of, you know, a real risk of something that's on Donald Trump, where they feel that it is a risk that he will not be in office, then we've got a problem. Then stocks have a serious problem, because then we'll give up all of our gains from his presidency.
Good point.
And then some. So, you know, then you're talking about from the election. When was that? That would be right here. You're talking about giving up all of these gains and then some. So unless we're going, oh my God, he may not really be in office after this is all said and done. That's when the market will get really freaked out, because then all of his policies will get undone, or people will feel that way, or at least trade that way. So, but anyway, but I agree with Peter in that I would think that it would just be looked over. But hey, I'm gonna pass everything over to Steve and Stelios. I want to wish you guys a great Friday, and then also, you know, don't forget that Ron is going to be here, Captain. And by the way, Dale, you have to ask him why his nickname is Captain 2/10.
Okay, I was curious about that.
Two-tenths. He's known as Captain 2/10, and there's a reason behind that. And by the way, if you're in the here's the ForexAnalytix chat room. You can see there's about 90 of us in there right now. You guys can say hello. You're on Jumbotron. Captain he's right here, 2/10, and you can see him right there. And so this is our community. He's been part of our community for years and years.
It's not a measurement of liquor, so I know that, right? You never go up to a bartender and say, "Give me a shot of 2/10."
No, it's definitely not. It's definitely not. And I think Chi just posted boobs. That's great. Oh, geez, there we got to go. Okay, that's what it just went south. Just went south. Okay, all right, guys. Hey, Steve, Stelios, are you here?
Absolutely, mate.
Good morning, guys. TGIF.
Good morning, mate. Good morning, TGIF.
All right, I'm going to pass it over to you, because I got to get hopping here to the market. So, you guys have a great Friday, and I'll be listening in actually when the captain comes on. So I'm going to just put myself on mute.
Okay, same here. I'm going to definitely stay for this interview.
Have a great weekend, Blake.
All right, thanks, guys.
Have a great one, mate.
Thanks everybody for listening in as well.
Hi, Steve.
Okay. Hey, Dale. How have you been,
So
mate?
you and Stelios are like Jason and the Argonauts. That's when it come up with.
Yeah, we'd probably need to get a few more as company to approach.
Mythological.
Yeah. You know, that's why I named my son Jason, so at least, you know, perhaps he can be Jason and we can be the Argonauts, right?
Yeah. Great movie. Great story, right? So I'm interested in, you know, everything you have to say here, Steve. But, you know, on Fridays, it's kind of like a good time to, you know, think about what markets did and how they finished up, and maybe a look at the week ahead.
I think the markets are going to finish in a positive note having to do with risk. We said that yesterday. I mean, it looked like USD yen really wanted to break higher, didn't finalize yesterday, but as it seems, it's happening today. SPX is also breaking. If you see the 4-hour chart, it has already broken above the inverted head and shoulders formation. Yesterday, he actually established a long position in the SPX at 2,664.4.
What do you look
A third,
for? 28?
a third of a position, and I actually added to it like 5 minutes ago, like what was 2 handles lower than where we currently are. I'm looking higher. I mean, I'm seeing an inverted head and shoulders formation. Here it is. I'm looking higher.
2,800 is about what it measures to, that formation?
We can measure it if you want, but my problem is not exactly where it measures, because to be honest, I'm still cautious.
Right.
So before we even get to whatever it measures, first area of resistance I'm seeing here is the 61.8 at 2705. So, you know, before we get to where the ultimate target is, I want to take it as, you know, one step at a time. So I'm extremely cautious. I have a very, very tight stop loss. My stop loss is below this area you see here. So just below 2,650. So, you know, I'm taking it one step at a time. I'm willing to increase my position even further. Now it's half a position. I'm willing to take it up even to 2/3 or perhaps a full one. It depends on what kind of momentum we see. And, you know, I'm going to be monitoring this very, very closely, because, you know, there is no clear trend yet. And although I do see the signs of a bigger rebound here, you know, I don't want to like, you know, fire and forget this kind of a position, right? So I'm going to be babysitting it more or less a little bit, which is not the standard thing I'm doing, but in this case, I'm going to babysit this position more or less. So, but I'm pretty happy because everything seems to be working fine. Everything seems to be working as it should. I mean, here is the USD yen as well on the 4-hour chart. You can see it here. It has finally broken above this consolidation. So I think that, you know, everything points that risk might, you know, resume being somewhat frothy, and, you know, why not take advantage of that? You never know. It might end up being something more than, you know, short term. So why not? I think this is a good reward to risk opportunity, right? Now, one thing I wanted to also show yesterday, but I completely forgot about it when I made my recap, was the fact, and it's still the case for two of them, that, you know, I'm tracking mostly like 3 cryptocurrencies here. It's Bitcoin, it's Ethereum, and it's Ripple. Okay, Ripple is testing resistance as we speak. Ethereum is the one that was testing resistance yesterday, but now has broken higher, and Bitcoin is about to break higher. So Bitcoin about to break higher from this descending channel. Ethereum has already broken up from this descending channel. You can also see this, you can also interpret this as a descending wedge, right? So depends on how you want to look at it. You want to see it as a descending channel, you want to see it, you want to connect these lines and see it as a descending wedge. Regardless, it seems to be breaking out. RSI was already diverging, as you saw there. So, you know, one more thing that points to risk on is the fact that cryptocurrencies, finally, after a long period of being beaten up, they seem to be breaking higher. Personally, as I told you, I'm not looking to be trading cryptocurrencies because I do appreciate the fact that, you know, they can actually jump higher from here, but, you know, I'm not going to go, and I haven't even considered going into the process of establishing like opening up accounts with whatever broker you need to do that. I don't like the fact that these are markets that it's not easy to get in and out. I don't like the fact that cryptocurrencies have no proven intrinsic value, which means that if you combine that with the fact that, you know, conditions are very often illiquid, so, you know, having something that has no intrinsic value and having no fast exit and no tight spreads is, you know, those are conditions that you know, push me away from wanting to trade these markets. But that doesn't mean that I'm not going to monitoring them. First of all, we cover 2 of them in ForexAnalytix, but second of all, as I said, you know, sometimes they also give you some kind of an indication of what's happening. In this case, I think that this kind of rebound, with the rebound we're seeing in the risk, they are correlated. Okay, so that's one element I am taking into account. So I do believe that, you know, there are high chances, if we don't see something like a surprise, there are high chances that we might actually see the week closing on a positive note, with risk being bid, with yen being weak, not USD yen, right, being weak, etc. So we've been seeing some strong follow-through moves. So this is my new position. I'm still short the Euro Kiwi. Nothing has changed here. I'm actually quite happy, to be in this position. I almost got triggered on my limit order to take off half of it, but that didn't actually happen. Almost got it today because we almost reached my limit order, but I'm still okay holding this. I mean, I'm comfortably in the money, and I'm still short half of my initial position in USD CAD. Personally, I'm seeing this little consolidation here as a consolidation before another push to the downside. My second target is at 124.20, and that's where I have my limit order to take profits on the rest of my position. And I'm now out of my, to give you a full update before we go on everything else, I'm now out of my pound yen short. I intended to add another half a position higher, but the way we sliced through this resistance and the accelerating momentum simply told me that this is not the trade I had in mind. So I didn't even add to my half position. I just took a 1.1% loss on half a position, and that was a failed attempt, and that's it. I'm not even looking back. I don't even care. It still has a chance of being an overthrowing this and let's say reversing, let's say from the 78.6, but I don't really care anymore because the initial criteria I had in my mind for putting my toe in the water was of something completely different. So I don't care anymore. I mean, even if it reverses, I don't care anymore. I mean, it's not the trade I originally had in mind. That's why I didn't even add to it, and that's why I'm out of it, and I'm pretty okay with that. Obviously, Blake had a look at that. Cable is still well bid. There's no question about it.
Transparency, Steve.
Sorry,
a lot of people are revisionists, or when they make a forecast or take a trade that doesn't work out, they never address it. So I just want to point that out.
No, it's okay. It's absolutely okay. Yeah. It's part of the game, right? I mean,
that's what I mean.
And if you remember, even when I established that, I said that, listen, I know that in the short term it's counter trend, so I'm going to be cautious. I'm going to take, a short risk. I've had some very good months, especially the palladium trade, etc. I mean, I can afford, making several like little attempts, like the SPX I'm doing now, and even failing. It's okay. It's part of the game. If you're afraid to put your toes in the water and test the conditions.
It's not the fear of risk that I'm addressing. I'm addressing that a lot of people are revisionists, and a trade doesn't work out, it's never mentioned again. And that's what's different about what happens in here. Blake talks about trades that don't work out. You talk about trades that don't work out. So, it gives people more of a realistic picture of what it's like, that it takes perseverance to do it. Absolutely. Because it's not always blue sky. You know what I mean? It rains.
Absolutely, this is trading.
Yeah.
Yeah, but it's perfectly okay. I mean, it's part of the game. You can't have only winning trades. You can't also have only losing trades. It's all about statistics. If your winning trades are more than your losing trades, or at least if you make more than you lose, because there are a few traders I know that have a low percentage of winning trades because they're trying to catch reversals, but whenever they manage to catch like a winning trade, they make like multiple times what they risk. So they can afford being right like 30% of the time or 35% of the times, and still are very successful. But the vast majority of the traders, to be honest, they try to be right a little bit more than they're wrong, and also make sure that they maintain at least a 1-to-1 reward to risk ratio, and that's enough for you to do okay, right?
Yeah. I have a question on a pair. I was wondering what you thought. I was wondering what you think of the Swiss here, because I have it. This 96.70 for me is a real important area. I'm wondering.
Thank you for reminding me the Swissy, because I talked about the Swissy on the chat room yesterday.
Okay.
Yesterday.
So you're thinking what I'm thinking, rising wedge.
Late afternoon.
All right.
I'm thinking that we have here triple confluence here, a triple confluence of resistances. It's this descending trend line, it's the 200 DMA that is conversing there, it's the ascending wedges resistance. So simply put, I'm thinking that RSI also has not hit overbought, so it's consistent with a move that is likely corrective. So I'm thinking that, this is also not a very high probability trade because it's still strong. There's no question about it. But I think that it's worth an attempt, and I'm even considering it, actually. This is also one of the reasons why I would be very careful trying to short the Euro USD.
Right. That's what I was thinking. So you have an inside week. If you pull up the weekly, Steve, you have an inside week.
Absolutely, let's do that.
And I'm pretty sure it's inside of the previous week's range.
There we go. Let's see.
Yes.
Yeah, it is an inside week. You're right.
So ideally, early next week, I'd like to see it up around 90. One more marginal new high around 60. 50 in that range. Just take out this week's high and then look for it to turn lower on the week would be
one thing is for sure. Momentum seems to be waning, correct?
Yeah.
And we are very, very near a very important confluence of resistances. One thing is also for sure, the previous move has been to the downside. This looks a lot like a corrective move. So I think that, the chances are very decent for us to see some kind of a reversal here. Yeah. And one more thing, because that's what I talked about yesterday when I showed it in the chat room. One more thing you have to take into account is that also the Euro Swiss is coming very close to very critical resistance, which means that this might also cap somewhat the weakness that's coming through the Swiss franc and is affecting the USD Swiss, right?
Yes. Nice.
So the closer we get to the 120 level, the less chances that the Swiss component will help the USD Swiss ascend. Because I think that the 120 area might prove, at least for a period of time, very, very hard to crack to the upside. Because we know how extremely significant this level has been for years, right?
Yeah, nice correlation.
Yeah, so I'm in total agreement with you. I like USD Swiss. I like the USD Swiss very much, and that's why I'm paying close attention to it, and that's why I also mentioned it explicitly on the chat room yesterday. I think it's something that people have to keep an eye on at the moment. Now, I messed up. I had a lot of meetings these days. I had told myself, if you remember, we talked about the Aussie yesterday. I told you that, listen, the fact that we have a second daily spinning top, at that moment it was a spinning top, and it ended up being a spinning top at the end of the day. After such a strong day that we had in the Aussie USD, tells me that the Aussie USD has at least one more leg to push to the upside. So I had told myself, I had a mental note to put an entry order at 7780 to go long, but I completely omitted to do so. So, I would have wanted to be involved with it and have a position long already, but that didn't happen because I completely forgot to put one. That doesn't change the fact, though, that I want to test the waters here as well. I want to be a buyer of Aussie on any pullback towards the 77.80 area. So I think I'm going to start establishing a position here as well, if the market movement permits me to do so. Okay, I do see the potential. I talked about it yesterday as well. I do see the potential of having found some kind of a low here, and we can even potentially push to new highs here without changing the fact that in the long-term chart, this looks like a nice corrective move to a very, very strong downtrend, right? So, okay, I'm not saying my target is not up there, but I'm saying that there is a lot of potential for upside. We may even test this area here, which is a descending trend line resistance, and then get rejected or whatever. So I don't know what's going to happen, but I do see the potential of quite a lot of more upside. So these are the things I'm watching and make me feel even more comfortable by having established, a long position on the SPX. The fact that commodity currencies seem to be well bid, USD yen is breaking out, cryptocurrencies are breaking out. So I think the market is feeling quite good the past few days, and who knows? It might even continue for the upcoming week, right? Okay, so let's have a look at what people want to see, and we're going to get some ideas from there. Hi, I would like to ask your thoughts on spot gold. Why it is trading in a tight range for a few weeks? Okay, we've talked about it several times. Now, the why is not really important in this case. What is important is what's going to happen from here. And in my opinion, what's going to happen from here is that the chances for a break higher eventually from this triangle, because I'm viewing this as a triangle, are much higher than a break to the downside. So I'm going to be looking for a confirmed breakout and the daily close above 1355. I repeat, a daily close, because that's all I care about here, and that's what kept me from getting trapped in this false breakout a couple of days ago. So I would like to see a break high from here, and a push towards the 1400, 1405, which is the 161.8% extension of the widest range here of the triangle. So technically, I think it would look good, but who knows? We've already been trapped in this triangle for weeks. We made a failed attempt to break out this week, and it might take more weeks, a couple of more weeks or whatever to break higher. But I'm going to be trading this once it breaks to the upside. I'm really interested to be trading this. Now, silver is a lot more complex. So I think that if you have to choose between the two of them, you can see it here. Silver is in a much tighter consolidation and for a much longer period of time. So I think that especially if you're looking to trade strength in one of those metals, I think gold is the place to be and not silver. Dear Dale, sorry, I have just signed in. Have you had any analysis on DAX and France? Okay, no, we haven't had a look at them, but I will gladly do that for you. So let's have a look at the DAX. There it is. DAX currently trying to break above a quite important trend line. You can see it here. We had said several days ago that, listen, if we rebound from here, we remain in a contracting range, and we might get rejected once again from this trend line you see here. It was the megaphone formation support. It then acted as resistance, but we seem to be slashing through it today. And I have to say that if we confirm a break above there, that opens the door for a push higher towards the 12,900 area, which has been acting as support resistance multiple times.
That was a nice three drive at the bottom.
Yeah, it was. You can see it here also in the RSI. It was a nice three drive. It was a nice rejection once again from the 11,800 area. So it looked like a good bet to play it counter trend, and whoever did it actually worked out. So if we do manage to break above there, I would be looking, as I said before, for 12,900. That's a significant area of resistance, and we can see what happens from there. Now, let me have a look at the FTSE. FTSE is now about to test also a significant support resistance area at 7,300 roughly. Let's see what happens from there. But as you see, it has had a really nice V-shaped recovery. After producing a triangle, it pushed lower once again, and for those that were here, if you remember, I said that, listen, I wouldn't mind if FTSE found a low here, because FTSE has actually satisfied what I was expecting, which was a clear push to new lows, which other indices didn't do. This one did it. So it was a nice opportunity to try to be long if you wanted to do that. Personally, I didn't. And the V-shaped recovery is quite good looking.
It's interesting. This rally in FTSE is happening with a strong pound. Usually it doesn't work that way.
Yes,
isn't that unusual?
Very true. Very true. Very true. Which shows how strong it actually is, because as you very well said, very often we see in markets, especially outside the US, that a weakening currency obviously attracts investors because it makes it cheaper for them to invest in it, and vice versa. So in this case, seeing concurrent cable strength and FTSE strength shows that the rebound is indeed strong. Now, the same friend is asking about the CAC. So he actually mentioned the CFD. Let me see. Yeah, here it is. As you see, I'm not tracking it. I mean, I'm not doing analysis on it. I've never traded it, but roughly, I mean, we can have a look at it. It's more than obvious that there was a nice trend line here that rejected price action. It's more than obvious that there was a nice horizontal area of support resistance here. So briefly, having a look at it, you can see that, there we go. We're approaching once again the 61.8. And, this is a large consolidation, more probably. You have to respect the previous trend, which is higher. So, an eventual break to the upside looks likely, but, who knows for how long we're going to keep, chopping around within this large range. I mean, nobody can tell you for sure. So, I would be paying close attention to the fibs. As I said, 61.8 is coming. We might see some short-term pullback from there. We're currently in the middle of this range. So I would say that, unless you have a strong bias for one reason or the other, besides having a long-term bias, which makes sense, as I said, in the short term, I don't see any real bias you could have in the middle of this range. So personally, I wouldn't be doing much with it here. I mean, buying it down there would have been a good idea, a nice opportunity, because you can see this area has been a significant area for some time. Perhaps it was also even, who knows, we can have a look at it. Might have also been a fib level. No, it wasn't actually. It was the 38.2 was lower than that, but yeah, whatever. So, you see that not much to do right here. I mean, I think there are better opportunities out there than trying to get chopped around in the middle of a range here. Nobody asked for it, but let's have another look at the IBEX as well. IBEX is still moving lower. In my opinion, this move lower is very well behaved. We remain in a large range, but I would still believe that some type of another push to the upside is likely from here. Okay, so I wouldn't be surprised if we saw a push to the upside towards at least that high once again at some point. This trend line support has been holding very nicely. This is a nice channel. We got an overthrow from it, but it is a nice channel. The prior move to the upside was quite strong. I mean, at some point it even became parabolic. So yeah, why not? Let's have a look at the Nikkei as well. Nikkei quite mixed, as you see. Also, this could have been a 3-drive formation, more or less. Currently testing resistance here at the 22,000 area. I think that if we break above this, it opens the potential for 23,000. So, Nikkei is also testing quite an important resistance. If that cracks, it might point to even higher prices for the USD yen. I mean, we might see USD yen, as we said, trading to 109, a very nice confluence of resistances. It's a 50% fib. And most importantly, it would more or less bring price to retest this long-term broken trend line support, this time as resistance, obviously. So 109, especially if the Nikkei breaks to the upside, you know, quite possibly could be trading even, you know, next week. Hi Steve, Euro Kiwi, a trend line support daily. Yeah, I know, Dimitri. It can pause here. Actually, my limit order was not triggered for like, you know, like I don't know, very few pips, less than 10 pips. So I might manually take off half of it at some point today, to be honest, and book, you know, half profits here, because yes, this is an important horizontal level of support, as I showed before. I agree with you there. Have you changed your mind on pound yen and the yen narrative? No, Bill, I haven't. I'm still seeing the potential for more upside in the USD yen, without meaning that, you know, the bearish trend has changed. Now, having to do with the pound yen, yes, I'm seeing it being a lot more stronger than I wanted to. So I'm a lot more cautious, and that's why I don't want to be involved anymore. 40% plus win ratio with lesser drawdown is key. Ronit, yeah, depends on your trading style, Ronit, but yeah, that can definitely work. Some pattern in natural gas. Let's see what you're seeing. Natural gas is an instrument we haven't seen in some time, so yeah, good opportunity. Yeah, it looks like it's coiling for a potential break higher. This definitely looks like a consolidation that can push to the upside. This trend line has already been broken, although I have to tell you that this trend line to me is not really that important because it's just connecting two points. This trend line is more important here because it's connecting 3 points. So although I do pay attention to this trend line you've drawn, I'm not really interested in this trend line. So I'm not considering it that much of an indication that we've seen a breakout. But for me, what's more important here is the fact that this definitely looks like a nice consolidation that is likely like a pennant that is likely to break the upside and push higher. So I do think that natural gas looks quite good from current levels. Hi, please, can you give me your opinion of where the USD ZAR is going? Absolutely, let's have a look at it. Last time we looked at it, I remained of the opinion, since we had a major breakdown, that USD ZAR is going to have more weakness. I was certain that USD ZAR is going to be suffering more once we broke below there. And what we're seeing now, in my opinion, is simply a bearish consolidation, right? So I think that you should maintain a bearish bias. I see nothing here that tells me that we found some time of a significant bottom. I'm considering this to be some kind of a consolidation / weak correction before another push to the downside. I will need to see a lot more to be convinced that this is something different than that. There is a trend line weekly and daily from 1,236. Does it relate or add anything to the gold? Mazed, it would be better if you wanna give me a link to what you're seeing. So give me a link to your chart. I will be more than happy to show it, and we can see it together. Hi, Stylianos, could you visualize a similarity between the Nifty Dow, especially from the bounce from the 200 EMA, the INR, although this weekend does it take some wind out of the strength? Okay, let's have a look at the Nifty to begin with. Sunil, Nifty, there we go. Whoop, sorry, loaded it on the wrong place. There we go. Okay, Nifty still looks good. I mean, as I said when I was in Rhodes the last time we visited it, I would have loved to see a low being lower than that, but the fact that we pushed in new lows was enough to satisfy what I was looking for at least one more push to the downside. So, you know, this recovery is looking nice. I would be very, very careful at 10,600, right? I mean, this is a significant area. I don't think this is the place to be buying because we're getting close to that. I would be very interested to see what kind of a reaction we're going to have from there, because if we get rejected from there, we can then multiple scenarios open up again. But on the other hand, if we break above that area, I think that there is a significant chance that we found a significant bottom here. Okay, so I would be closely paying attention to this. And as you said, obviously, global risk is currently in a weird state. I mean, it's not very easy to read indices at the moment. Multiple scenarios are open. We're still in a choppy consolidation following that very, very strong push down that we had that began at the very end of January. So yeah, it's not very easy to read the stock markets at the moment. So we have to take it one level at a time. And as I said, 10,600, quite a significant area. And speaking about it, let's also see if that's also a fib area. No, it's not actually. It's between the 50% and the 61.8% fib. Okay, so I would be closely monitoring at that. My pleasure, mate. FTSE is a global index more than GBP biased index. Yes, Stephen, I agree, but still, we've seen that the movements of cable do often affect it. Okay, doesn't mean that it will always inversely correlate to it, but they do affect it. My pleasure, Jose. What is your opinion on weekly and monthly pivot points? I don't use them. As simple as that. I don't use them. I'm not saying, listen, I've seen many types of trading work out just fine, pivot points included in them, but for me, other type of levels like horizontal support resistance, fibs, etc., are more important. So, I've seen early in my trading career that mixing up too many elements will confuse you. So my personal opinion, and I'm finishing up with that, so Ron can come on. I have to tell you that personally, since I'm already using enough tools, in my opinion, to provide me with what I need to trade successfully, I'm not looking to add more elements in my trading. So I don't have much of an opinion. So thank you, Dale. Everybody have a lovely weekend, and I strongly advise you stay online and listen to Ron's interview. I know I'm going to do so. Ron has proved time and time again that he's an excellent trader. On the chat room, he always posts his trades. And he's a very nice guy as well. So Dale, I'm sure you're going to enjoy the interview.
Thank you, Steve. Thank you for another great week of analysis. And Stelios, thank you. Thank you, Blake. Thank you, Face. Ron, I've been looking forward to this, and I'm going to make you the presenter. So your mic should come on, and perhaps you'll share your screen with us. Beautiful.
How you doing, Dale? You hear me?
Great to hear your voice and have a conversation with you, Ron.
How you been?
I'm okay. So I consider this the first time we've had a chance to talk. We've done it in the chat and we've communicated on Twitter, but it's always nice to put a voice to a handle or a name. So let me start off with what Blake asked me to ask you. Why Captain 2/10?
Well, there's always been another Ron that preceded me in the Wise Trade chat rooms, and so we got the sailor part of it a little early on, so that was pretty easy. And then one day when Blake's pontificating about bearish engulfing candles or bullish engulfing candles, whatever it was that day, I thought, well, I'll throw my 2 cents in here. 2 cents. And so I picked a currency pair and I said, well, is that one? And of course, he blows it up in front of everybody and goes, no, you're wrong. It's 2/10 off. Click. So there it was, Captain 2/10. Right. Pretty simple.
Okay. How long have you been trading now, Ron?
The first couple of years, 7 years about, first couple of years was off and on, still been, doing some other business stuff and things like that. So you know, seriously, the last 5.5 years, I would say.
Okay, and would you consider yourself on a macro basis a successful trader after 7 years? And how long did it take you to get there?
It took me to get with Wise Trade and Blake to become successful. So it took me about 1.5 years, 2 years. I found him on Twitter. I thought anybody named Pipsar has to be, you know, just
yeah, what a great handle. Yeah.
So anyway.
He's kind of like Nicholas of Russia, you know. He's
whatever.
He's a czar. Yeah,
right.
And he's a legend. Blake's a legend in his own mind.
Absolutely. You know, you got to be.
We all are. Anyway, Blake is great. You know what I'm curious about, and I know a lot of it has to do with relationships that you form with people over time, but when you started trading successfully, why would you subscribe to any service?
Well, for me, being, you know, a home office, I'm not in a social context. I used to own a mortgage company, and I've been in the real estate and development business. So, you know, I'm used to being out amongst people, you know, most of the day. And, you know, being, you know, in the home office setting, you know, you wonder sometimes, well, what I'm going to do is sit here and look at these colored lines for the rest of my life. So to me, it really helped that way. The other is the interaction and the input you get from other traders. Not to say that you have to agree with it, or you have to trade that way, but I think it's important that at least you look at it and go, okay, well, I don't do that because of this, and I do this because of that. So it's like Steve Jobs said, right? It's the combination of things. So the interaction of, and of course you guys have proven this now with FA, is that the people that you have, the product that you've developed, I think for those people that are just on the webinar and stuff like that, you know, give it a shot. You know, they got, you know, whatever the entry is, you know, do it a month or two. If you don't like it, say la vie. But it's you will pay for your subscription. That's for sure.
Okay. All right. Well, could it be besides the social aspect, you touched on it a little bit, and then I want to get into your journey, is that we only have two eyes, and are there occasions where you're in the chat room and someone posts a chart that you weren't even looking at, and now that you've seen it, you end up considering taking a trade? I know Blake says he gets a lot of his good trade ideas from the private chat room.
All the time. Okay. I would say I don't know about more than half, but you know, 40%. Okay. A good 30-40%. You know, I didn't look at that. You buzz down there and look at it, and you know, if it fits my criteria, then you know, I jump it.
Yeah, so you have 180, 200 eyeballs out there collaborating with you. Now, Ron, I want you to trust me. We're going to get in a time machine and we're going backwards. All right, and we're going back to before Wise Trade. Tell me about how you got introduced to trading, who did it, what it was like for you, say the first 6 months in the trying to do this on your own.
The real estate market, was challenging to say the least. So I wanted to find something where, you know, it was totally up to me. You know, I hit the button. You either hit the button or you don't. I don't have to look to anybody else. So, you know, that's what I was looking for. I didn't want to be in a retail business. I'm 63. I don't need to start another business. I'm okay when it comes to that. So I wanted something that was challenging, flexible. I do a fair amount of sailing, that you can, don't have to babysit the entire time, but I do find myself, riding screens a lot. So that's kind of what took it at me. I made $3,000 the first week, which was the worst thing, as you're well aware of. That can never happen to you.
Right.
So, and I just kept getting bitch slapped around. Huh?
Did you ever blow out an account?
No, I've never blown out an account, but I've had to refund one, so I would consider that the same. You know,
Okay.
it never went to zero, but I put more money.
Yeah, I didn't blow out an account. I once had 85 cents left.
Yeah, there you go.
Yeah,
It was
okay,
it was a little more than that, but I did have to put the time into it.
I'm giving you a hard time. So, you know, I find it interesting that your other passion and love is sailing. And, you know, sometimes what we do that we love, there's some similar things. Are there any metaphors between navigating the ocean? Because I know you're in Florida, you've probably taken some long trips and navigating markets.
I don't know if it's correlated like that, but you know, when you're racing with a team, you know, you need patience. You need to wait to see what develops. You know, the weather is very fickle; it changes all the time.
Sounds like the markets.
Yeah. So, you know, like you say, you can't control the wind, you can't even see it, but you can adjust your sails. So that's, you know, you need to be nimble. It's pretty competitive around here. So if you want to do well, you know, you got to work hard, and you got to be patient. You got to be patient.
What's the most beautiful place you've ever sailed to?
British Virgin Islands.
Okay,
BV.
St. John's. Oh
Yep,
no, that's the American Virgin Islands.
Well, they're a stone's throw. I mean, you know, that whole chain is 28 miles, 26 nautical miles. So
have you been there since last season's hurricanes?
No, I have not been there since the storm.
Okay. All right. So let's get to your setups here, Ron, and talk about what you use and what you look at, and possibly even what you're seeing here in cables. So why don't you give us a rundown of, you know, some of the things you look at? I see dotted lines. I see highlighted prices. Why don't you give us a breakdown of your style?
All right. Let me just pop the euro up here and just go over the setup that I use. These solid red lines are the last 20 days, highs and lows. So I always mark out the last 20 days. And of course that gets moved every day. I got to move them every day almost. So it kind of gives you that feeling of, you know, where that overall or underlying market may or may not be going. So I have a 20-day sleeve there. I also know if it breaks that, you know, it's time to pay attention. And doesn't mean you jump all over it. It could be a false break, like over here in the euro, you can see right here. Or, you know, it can rock on you. So I like to have everything on my screen, so I don't need to go anywhere else to find out everything I'm doing with that currency pair. So the red dashed lines are my shorts. So those are my entries. So I got 3 in the money and I got 1 out of the money. The yellow solid lines are areas of interest to me when it comes to price.
Why?
There's price action to the left that tells me that that may be an area where real money, they, you know who we're talking about, have entered or made a move.
Okay, now that's a pearl from Ron for everyone who's fairly new. To find your pivots, resistance, support, you always have to look left, and that's the market's memory. Right. Okay, Ron, so that was a good mentoring thing there, to look left. All right.
My main thing, I use some other tools, which I'll get into here, but my main thing on the price screen is I use some EMAs. They're all EMAs. They're all the same on all the time frames. I do my setups on the 4-hour and 1 hour, and I look to execute on the 5 and 15. So,
okay, so what are the EMAs that you use?
The faster ones are 9 and 13.
Okay.
I'm not sure that makes a difference, but when you look at those, or at least when I look at them, I see that price usually reacts off them.
Okay.
So that's why I use those. The 48, the 48.
48 day is like the purple one, or
the black line there is, I'm looking at a 4-hour. So let's drop down to a 1 hour here. Well, let's just leave it here. So this black line right here is the 4-hour 48.
Okay.
I always know what's going on with the 1 and the 4-hour 48. Always. Always. So on this, here's a 1 hour. So on TradingView, because you can't default to another one, I know in some trading forums you can. But anyway, this black line's the 1 hour 48. This pink line here, or lavender, represents the 4-hour 48.
Okay.
Why the 48s? So I'm trolling through Twitter about a year and a half ago, and Bloomberg did a quant study. And they did a quant study to determine the most reliable EMAs. And they say the 48 was. So it's Saturday afternoon, I'm not doing nothing, so I go in, fire up the machine, take a blank screen, throw a 48 on it.
Yeah, because most would be using a 50. We're using a 50 before that?
It would, yeah, maybe it would vary. You know,
Yeah.
it just never, I never found something that I just, you know, I was doing okay, but something that I just absolutely stuck with.
Right.
This is solid for me. I won't change these. And if you drop one on a 48 and just stare at it, you'll see why.
Yeah.
If it's above the 48, you want to look for longs, and if it's below, you want to look for shorts.
Yeah, and it has served you well on the euro here.
It's served me well. It serves me well. It'll serve you well on everything. You'll see here the cross here.
Yeah.
Of the 1 in the 4-hour 48. Nitish pointed this out to me. He said, "Hey, go back and take a look at that."
Yeah. Nice.
And what do you see? You'll see some nice continuation. So so the 48s are very important to me.
So you know what? That's another good one. Someone, Nitish, saw your work and then saw something in your work that you didn't see, pointed it out to you, and improved your work from his input.
Absolutely.
See, another advantage of the community is that, you know, people look with an analytical eye at your work and they see you're successful and they can make suggestions to you to be considering other things. So, you know, that to me, that's great. That's what a community does. They support each other. So, okay, go ahead. Sorry for my, you know, my homily.
No, that's okay.
I just think it's so cool how people help each other. You know, it's, you know, I get jazzed when, you know, people are supporting each other and helping each other get better. You know, that's like steel sharpens steel.
Absolutely. So the 48s are very important to me. If you have faster EMAs that you love and they seem to work for you, I'm not so sure the 913 is etched in stone. But again, when you look at a 1 hour or a 4 hour and you say, "Oh, gee, look at, you know, price didn't go through it." Well, that tells me something.
Right.
So,
so these are all your market.
That's the price trace. That's it. That's the, now, do I use fibs? Do I do lateral support? Do I use trend lines? Absolutely. I'll get to trend lines in a little bit.
Okay.
The other thing that I've used, I just double clicked on the RSI. So, you know, I'm getting slapped around. I'm going, come on, I got to figure out something here. What can help me get in and out of trades better? And I'm thinking, okay, what do all the pros use? What do you always see on every pro's screen? And not that that's their trading screen, because you don't know, but let's just assume it is. Well, you'll see the RSI. So I go, okay, so this is standard 14 RSI. I have the shaded area is the 60-40. That's the chop zone.
Okay.
I will not purchase in the chop zone.
Okay.
All right, we'll go back here. Let's drop down to 15 minute.
You won't buy or sell in that zone.
I will sell in here. So if I'm like in here, like yesterday, okay. I had a short here that I took. Okay. So I have a short from here, from the other day. Yeah. Lower, fine. You can see where the RSI went down here, and I'm going to talk about that in a second. So I exited there. But here's an example. Look at that.
Yeah.
So if you're getting chopped, you know, up, take a look at that.
Yeah.
Don't trade in there. Just don't do it. You're going to be a lot happier. Especially, you know, if you're a screenwriter fine. You know, if you don't spend a lot of time in front of the screens, of course, you know, you don't see this crap. But when you're sitting here grinding away through Asia or late New York, that's a 5 p.m. separator, then, you know, you're just getting frustrated. And then you start searching for stuff, and before you know it, you make a mistake.
And you're just making your broker rich.
That's all you're doing. They love it. There's a reason why they're doing that. So anyway, the 60-40, you know, will I close a trade or peel some in there? Yeah, because I don't know what's going to happen next. It could come right up and take me straight out. So, you know, one of the things that I always try to do is get to break even plus something. Because if it comes out up and takes me back out, I can say this. I can say I was wrong and I made money.
Another pearl.
I was wrong and I made money.
Yeah.
Now, I don't care what these other guys on Twitter say about, you know, you should never go, you know, shut up. You're not writing me a check. I don't care. You know, you should be peeling and going to the bank all the time because you don't know where price is going, and neither do they. So
do you do a lot of, do you come out of partials, or are you kind of all in, all out?
No, I partial it all the time now.
Okay.
I usually do, you know, if I really think it's going to drop through the roof, then I'll do quarters. I like doing thirds because to get around to FIFO, I got 3 accounts.
Okay.
So if I do it in thirds, I can play each entry, you know, exactly how I want to. And one has no correlation with the other.
You trade with stops?
Yes.
Okay.
But I move them a lot.
Okay.
And I don't mind being small and wide at all. And
Okay.
That's usually how I start.
So you, give us an example of why you would move a stop.
Why would I move a stop to break even?
Oh, okay. All right. You don't move your original stop after entry until the trade has adjusted and it's in your favor.
Well, not necessarily. Even if it's in my favor, let's say something stupid comes out, like, you know, our famous tweeter, or just something that's ridiculous and price action goes the other way, and you go, come on, that's got jack to do with anything. So you got to wait it out. So, you know, if I need to bump it another 20 or something like that, I'll do it. I use 40 as a base. In my long-term account, I'll use whatever the ATR is. So if the ATR is $140, I'll use 140.
Okay.
If the ATR is 90, I'll start with 90.
Okay.
Let me finish this RSI here because this is the basis of what I do, and it's really simple. And you know,
do you have to have any certain type of risk to reward to qualify to take it? Or you just take it and see what kind of bar.
Yeah, you know, it's you know, Blake said 2.5 years ago that, you know, when we hit a high, whenever that is, that we're going to be in a chop market for maybe the next 5 years, maybe forever. And man, is he right. And when you think about who we trade against now, we trade against, you know, machines. They don't care if they made $1 million at 10 o'clock. They don't care. And they don't care if they lost $3 million at 10 o'clock. So, you know, how do you deal with that?
You have to become a machine.
Yeah, and then you got all this other input from 3 million other sources. You know,
makes your head explode.
Yeah, if you're trying to evaluate that for a trade, good luck.
Yeah.
So here's what
you can get info overload, can't you?
Yeah, I don't look at Twitter all day.
Okay.
I can't. Some guys can, and maybe I don't use it properly. Maybe I got, you know, whatever. I follow a couple people that I pay attention to, and that's about it.
Okay.
Let me finish this RSI here. Now you can see here's the 60-40. Okay, that's the chop zone. I do not purchase in the chop zone.
Right.
All right. So I have a dashed line here, which is what I call max, and then I have an extreme. And I do this on each pair. So you have kind of a customized little RSI on each pair. So what do? I sell here, okay, and I buy down here. You notice I'm so stupid that I even have to make sure that these are green and red. Okay?
Yeah.
All right. You know, if I'm on a 4-hour chart I am not buying up here.
Right.
I don't buy. Now, can it go up further? Well, hell yeah. Do I miss it? Yeah. I don't buy. I don't sell down here. But as you can see, the numeric over here to the right is nothing. I don't care if it's 78, 30, 12, 9, whatever. I'm interested in these touches. And this is dynamic, so you're always updating it.
Okay.
And what I'm looking for is where are your action points? Not exactly maybe the highs or lows, but you know, it may blast through this, but you know, if I'm long here, I'm looking at a 4-hour RSI, I can tell you that's a good trade. I can tell you that's a good trade. That's a good trade. That's a good trade, so on and so forth. And then I just work my way down. So that has really helped me, and it's helped me do two things. One, I don't get caught being long here, or I'm sorry, being short here, or being short here. So I don't get trapped anymore. You can see that's divergent. That's a great trade. Right. And I couple divergence with this, by the way. But anyway, so I don't get trapped down here, and I don't get trapped up here. So that has helped me prevent myself. You know, we've all had it. You know, we enter a trade, and then it goes 200 against me. Huh? Well, I would challenge everybody to go back over the weekend or when you have time, take your 10 most recent losers and take your 10 winners and lay them out against the RSI and see where you got in and out.
Great idea.
The other thing that I use is I use trend lines. And there's no trend line police that are going to come to your house and arrest your ass. So you can do this safely.
I don't know. Mueller's looking at trend lines now too.
Yeah, he could be. So he may be on the way. He'll be disappointed with me. That's for sure.
Maybe we shouldn't have recorded this conversation.
Yeah. I know more about you than you think I know, Dale, because you used to buy jewelry for your girlfriends in my uncle's jewelry store in DeKalb.
Oh my God, yeah.
I know lots about you.
Don't tell anyone.
Yeah. So anyway, the other problem that I had that this solved for me on the shorter time frames and the 4-hour, depending on this works on any time frame that I found, is when do I get out? When do I peel some? When do I take profits? So you can see on this euro, I got it spread out here. Here's the 4-hour. I got a couple of nice entries up here at it's 125 and change and a little under 125. I took a quarter here, and you can see why. Right down here.
Nice. Yeah.
Now I took a third here. I marked that a quarter, so that means I know that's a third. And if you drop down to 1 hour, you'll see that the 1 hour is pegged. But again, you can just drop a trend line on this, guys, and you know let it do the work. You got to give it a little room, you know, to breathe. You know, it's not a linear game. It doesn't go straight up or down. Now, does that mean it can't go down further? Well, no. So, you know, you draw another trend line like that. And at the end of the day, you know, it takes me 20 minutes to get all the trend lines off my charts. I don't care.
Okay, so you're mainly using trend lines on the RSI, not on the price structure.
Both.
Oh, okay.
You can draw a primary here and then a tertiary there.
Okay.
And then you can have your big one here. So if you trade, you know, a 4-hour chart, you know, you may be looking here, you know, that may be your primary. Whereas me, I'm looking here, and then because I'm down on the 1 hour and the 15 minute.
Okay.
This is probably how that would look if you transferred that to a 4-hour, something like that. But you know, it gets you out down here nice, and it gets you out nice and tight there. So don't be afraid to use it. It's so simple. I'm sorry?
You're a natural teacher, you know. You ever teach anyone your methods and people come to you and said, you know, Ron, will you show me what you do?
Yeah, I've helped a few people. There's a one gentleman in our chat that asked me in mid-December, and he's doing quite well. So.
Oh man, that's great, Ron.
Yeah, it's cool. Yeah, it's fun.
Yeah.
So divergence.
Ron's paying it forward in the chat room. What do you think, guys? Got to get in there. All right, go ahead, man.
Divergence.
Yeah.
So here
I
are
don't
three.
know anything about RSI, so
Right. Yeah. Right. Yeah.
I thought I'd learn.
You know something about jewelry and girlfriends.
Yeah, but I thought I'd learned from the master trader today.
Yeah. Right. You know, that was funny. Master. At least you didn't put the other thing on it, which I thought you were going to do, but I thought it was coming. But anyway.
I used the right consonant. Okay.
All right. Yeah. Close. All right. I took this trade this morning, right?
Yeah.
So there's a 15-minute.
Yeah.
You know, nice and divergent here.
Yeah.
Okay. So I'm long right here. And where does it stop to? First stop. There it is, 48.
Nice.
So that's the 48. There's the 1 hour 48.
Okay.
So that's probably my target. We'll see what happens here. Now again, if you want to play it tight, I'm in at 97. That's where are we at? We're at 30. So you know that's one little trade.
Would you take a piece off up 30?
I'm doing okay here, so I'll probably wait. But you know, if I was, it would be a quarter because I think we're going to see this. You know, this is going to come down. You know, this looks too happy up here. They got to fill this price gap here. So you know, somewhere up, I think in this range.
Okay.
So we'll see. I took a little AJ this morning. I'm just trying to show you just a few setups real quick. Same thing. Divergent, maxed, right?
Yeah.
That's on the 15-minute. Divergent, divergent.
Yeah.
So part of the thing that people have been saying or looking at, I think in the chat room, is, man, you're top ticking this crap. Well, sometimes I do and sometimes I don't. But what is the key? The key is divergence in the RSI. Now, does that mean all the time if it is divergent, you throw the barn at it? Well, as we all know, nothing works all the time. Of course not. But then, you know, go to a higher time frame. So let's just see what that looks like. Divergent, down we go. So where are we at on this one? I'm at an 84, 83, 84. What do I get? 84.04. So I got 16. I got 20 on that.
Okay.
That's 50. Real easy, straight off. So there's 50 points, and this is from about 7 this morning. I think these entries were. And
nice work.
One other I was just gonna point out real quick. So, and that was the pound. I think we're looking at that.
Yeah, you started with the pound up there.
Yeah, there you go. Same thing. Here.
Right.
Divergent.
Yeah.
Took a little shot.
Yeah.
So, so divergence to me means distribution. Okay. That means after this run up here at the top, yeah, I'm looking
at the bottom,
only at,
it means accumulation to you, right?
No, it means distribution at the bottom also.
Oh, okay.
They're getting rid of their shorts.
Okay.
So what'd they do down here? And remember, you only, you know, RSI is based on the close. So I don't use the wicks when I'm determining RSI. Do I look at the wicks for pricing and things like that? Well, yeah, of course.
Right. And you never know what kind of candle it is till it closes.
It's not a candle till it closes, as you say.
Yeah.
Okay. So
go ahead.
So again, if it's not divergent, then I look to it to be a regular retrace, just a standard retrace, possible continuation down in the direction it was. So, and these, again, I don't throw the barn at it when I see it. I mean, I am paying attention now. You have my attention. Now I look for my other stuff. Now I use my price tools, which you had this guy on, I believe, on February 22nd, and ICT and Huddleston.
Oh, okay.
And I use 3 of his concepts, and they have really worked well for me. And
okay. That
is the price gap. You know, the liquidity pools are real simple, and like you've tried to beat this into everybody has. Man, this market runs on liquidity. You have to identify where the stops are. So, you know, like you said on that other trade, you know, when I peel some off, now I'm kind of looking for where the stops are first. Let them run some stops.
Interesting.
Always. So the first thing I'm looking for, first thing in the morning, okay, where is the liquidity? Do I have any divergence? You know, Do I have any order blocks?
Do you write things down, or you just know from scanning your charts?
No, I write things down.
Okay.
I hand write them down.
Okay.
I keep a journal of every trade. I print the screen.
Okay.
I make notes on it.
Beautiful. Because you'd forget all this stuff if you didn't, wouldn't you?
I would.
Not everything, but you know. And NLP says it's imprinted in your memory more after you write something than if you think something.
Absolutely. And I know some people can use tablets, and I'm not the most computer savvy guy, et cetera, so on and so forth. For me, writing it down, it's in front of me.
Right.
Then when I close a trade, I print it. I make my notes on it. I put it in my binder, you know, what I did right, what I did wrong, how it ended up, you know, how much of my checklist of entry points were covered. Did I have 4 out of 5? Did I have 3 out of 5? You know, was it kind of a flyer and it just worked out? So on and so forth.
So Ron, I've seen a lot of people trade, and I've done a lot of interviews, and I've seen a lot of charts, and I could say that no matter the method that you chose, that the ingredient for your success is your disciplined nature. That you would have found different pivots, different moving averages, but your discipline and you know, writing things down and your preparation is really a key ingredient that most people don't have in their personality. Okay, so I would say that being a disciplined guy, what you probably have to be a sailor, and also to navigate markets, is really the key element I get out of talking to you for half an hour. Congratulations.
Well, thank you. Let me just stick this in here. You know, yesterday we were all complaining about the pound yen here, me being one of them. But one of the reasons why I didn't jump here on this short is it's not divergent.
Confirmed.
Confirmed, so it went higher. So now, waited. I'm going to wait, and I may jump this heavy because I'm, you know, doesn't mean I don't have losing trades, man. Selma's got me up in the face, and my yen pairs are up in my face. My AN has been awful. You know, I bottom ticked it, you know, and I went in with a pretty good size. So, you know, I should be able to straighten that one out. But
are you self-taught about knowing about RSI divergences and the implications of when there is no divergence, that when the market confirms, that tells you something too?
No, that came from Huddleston.
Okay.
So divergence equals distribution. If you do not have divergence, then you're looking at possible accumulation for another leg. Now, again, that doesn't necessarily mean that's exactly what's going to happen. You know, there are instances, you know, where you could have, you know, some divergence early, and then it's not divergent the rest of the way. Well, then I just sit back and I let them show me which way they're going to go, and when they do, then I'll rock with them.
How do you feel about not having a trade on? Do you ever have days where you do nothing, or because you scan so many things that you trade every day, like Blake?
Yeah, it's pretty rare, to be honest with you, that I don't have something on, but it doesn't trouble me at all to not to have anything on. You know, cash is a position. And I'm finding that now that I think I have a working knowledge of price. You know, there's no doubt in my mind that I think price is going to come right back here. I mean, because it's going to fill that gap. So.
Well, I want to have you wrapped it up, or what would you? Okay, give your best piece of advice to both veterans and people breaking into the industry. The most important thing for them to keep in mind to do this.
For me, and I have this placard, you know, on my desk, and Chris Bear said it. Blake had him on back in the Wise Trade days, and that is never let your analysis get in the way of your observation.
That's a beauty.
Secondarily to that, and I'll leave it at that, is that somebody asked Rothschild one time, how did you make so much money? Man, you're rich. He said, I got out too early.
Okay, kind of like a Bernard Baruch. You never go broke taking profits.
Never.
Yeah. Well, thank you so much, Ron. You know, some very enlightening things. It was also great meeting you in this way, and thanks for your giving nature. Or someone reached out to you in private chat, and you helped them. I really admire that, and great to have you as part of the family. And actually, I'm newer to the family, so I thank you for welcoming me to the Blake clan. You know. And have a great weekend, and thank you again for sharing your work with the community. And I think people will get a lot out of it if they didn't see it live when they watch this video. So you know, you're my trading warrior brother, and I'm rooting for you.
Well, if you're ever having a bad day, this is where you need to go, okay? And let's see. Is it coming up?
Yeah, it is.
This is the soggy dollar at Joost Van Dyke down in the BVI, and that's a great place to hang out.
Wow. You know,
So,
I fantasize about moving to the Caribbean.
So
I do. You know, I have a friend. He's always talking about St. John's starting. Yeah. You know,
it's beautiful.
One more adventure.
Yeah, St. John's,
right.
beautiful island. Thank you, Dale, for having me.
All right, Ron. It was a great talk. All right, FaZe, have a great weekend. Hope that we've added value to what you're trying to accomplish here this week. Hope you had a good week. Maybe picked up a piece of Aussie Kiwi or some of the great ideas in private chat. So, you know, Ron's a great example. He's a pro. He doesn't need to be in a chat room, but he is in there and actually is paying it forward there. So, above all, don't just count your pips, count your blessings. We'll see everyone next week. Good luck on your taxes. And I'll see everyone on Monday, God willing. Enjoy your weekend. Thank you, team. Thank you, FaZe. Cheers, Kareem. Your Twitter handle? Ron's Twitter handle, I have it here. It's at RMA Sale, S-A-I-L. That's Ron's Twitter. You got it? Yeah, I don't think I've ever interviewed Chris. Invite him for me. Okay, everyone. Have a great weekend.